In this market update, I'm going to be talking about why it's important to invest looking forward and not looking back. Hi, Jim Gore from THOR Wealth Management. You should be investing like you're driving your car, looking forward. However, too many people look in the past like they're looking through the rearview mirror when they're driving. When you do that, that's usually when an accident occurs. So you want to look out forward what is going to happen. If you look at this is looking at the past. Past 10 years, you look at emerging markets versus the SPY, the S&P 500. You can see you've had a 206% rate of return over the last 10 years in the S&P 500. Emerging markets, you only have an 11% rate of return. Significant difference. So if I'm just basing it on the last 10 years, I'm making a mistake because I'm not looking forward. Another way of looking at what has happened in the past and kind of project out to the futures are reversion charts that we create here at THOR. And this is looking at emerging markets have significantly underperformed the longest time period ever. You're looking at almost 13 years of underperformance in the emerging markets versus the S&P 500. However, most people loved the emerging markets back in 2009, and you can see that the emerging markets did very well the prior 10 years. They outperformed the US market significantly. So these things go in trends. Sometimes the emerging markets outperform, sometimes the US outperforms. But it's been the US for a long, long time now. What we're saying is, looking forward, that is not going to be the case. Another thing to look at in the past, what has happened, the reason why emerging markets have underperformed, is that when you're investing in emerging markets, you're taking US dollars and investing it overseas. And so you're buying those assets with US dollars. Well, you can see here that the US dollar since 2011 is up over 40%. So you've lost value by investing your money overseas. However, is that going to change in the future? Well, we think it is going to change because the dollar does go in and out of favor. A better way of looking at it longer term for what's going to happen in the future is let's look at the emerging markets themselves and the earnings estimates that are coming out from analysts for the emerging markets. And what's interesting here, they're looking at different years. You can see 2023, that earnings have actually fallen in the emerging markets. They're looking at down 6%. Next year, they're expecting the earnings right now 23%, in 2025 15%, and 2026 up 12%. So right now, analysts are projecting that the emerging markets company are going to have fantastic earnings coming out of that. So looking forward, we know that the emerging markets are cheap relative to US. And then you look at this, the earnings are going to be better than US companies. And you're looking at some significant earnings growth over the next, not 1 year, not 2 years, but the next 3 years. The other reason why you're going to start seeing the emerging markets earnings go up is you've got to look at their profit margins. And if you're looking at the profit margins, this is what is happening to profit margins. Notice that they've come down significantly in 2008. When everyone liked the emerging markets, they were earning over 10% in their profit margins. Well, it went down to 6%, it's up 8%, but notice that trend. We're having higher highs and higher lows. That's a good thing. So part of the reason why you're going to have earnings go up in emerging markets is that their profit margins are getting back to historical norms of 10%, whereas in the US, we are at all-time highs for profit margins. As a matter of fact, to get back to norm, we're looking at profit margins will probably drop anywhere from 2 to 4% in the United States. So this is why it's important to look out for the future, what's going to happen. And right now, the emerging markets are going to be a place that we believe is going to outperform the US market and probably pretty significantly over the next couple of years as the US dollar falls in value and as earnings increase in the emerging market companies. If you have any questions or concerns about your portfolio, as always, reach out to us here at THORwealthmanagement.com or give us a call. Look forward to talking to you in a couple weeks.